Time now for a look at the day's business news with Stephen Carroll. Good to see you, Stephen.
Hi, Delano.
You're starting out with the markets that are closely watching what happens out of Westminster.
Yeah, if you want to know how the markets feel about Brexit, it's the currency markets you have to turn to. That's where we see the reaction, and we've seen the reactions, in fact, over the past 2.5 years to the twists and turns in this story. If we go back to 2016, investors expected British voters to choose to stay in the EU. When that didn't happen, we saw the value of sterling plunge, shown here against the dollar, and that pound actually never recovered to those pre-referendum levels against the dollar since. Now, as the negotiations over the withdrawal agreement went on, we had moments of hope where we saw sterling rise, but when a no-deal scenario looked more likely, we saw sterling fall. When we look at where the currencies are trading today, pretty flat, the pound against the dollar, and up slightly against the euro ahead of that all-important vote later. Well, let's delve into the possible market reactions to what might happen in Westminster later. I'm joined from London by Richard Perry, market analyst with Hantec Markets. Richard, thanks for joining us. We're expecting the vote in the House of Commons to be defeated. How should we be expecting the markets to react to that?
Well, I think it's been interesting in the last few days. I think that sterling has actually been rising, and that's on the possibility that we could be moving towards a scenario where you could even see an extension to the Article 50. So I think that that is one of the reasons why we're seeing sterling rallying. Now, in terms of today, Theresa May is going to lose this vote. That's pretty much guaranteed. Now, exactly how the size of the defeat comes in for Theresa May will determine, I think, the next step that ultimately plays out in the political field. The essential sort of scenario that we're looking at is that her defeat is going to be pretty large. It's going to be well over 100 votes. Now, I think in that scenario, the EU is not going to be open to any sort of renegotiation of the current deal status that she has at the moment. There would need to be a complete rehash, because I think that the chances of her being able to get a rehash of her deal through Parliament is very low. And I think that subsequently what we see is the likelihood is that sterling will ultimately fall on the news of the defeat. But if the sort of moves and the political sort of avenues go towards more of a softer Brexit, I think we could ultimately see that that sterling decline being bought into for the markets.
So it's sort of a question of a small ending on the way to the big ending in this Brexit drama. What sort of range are we talking about, though, if we, I've seen mentions of the pound going as low as 112 against the dollar, maybe parity with the euro. Is that something that you could envisage in an extreme scenario?
Well, if you're talking about extreme scenarios, the only real scenario I can see that happening is really in a chaotic no-deal Brexit, which is still a possibility. I mean, you look at probabilities of maybe 20% of that happening, whereby the UK just doesn't, the Parliament doesn't really have an agreement, and they sort of fall into a technical no-deal Brexit where the Article 50 just elapses and then they go into no deal. Now, there's a movement in Parliament to prevent that from happening, and certainly I think that the ball would start rolling pretty quickly to make sure that that isn't the case. So I think that how the Parliament moves next is going to be very interesting, because Theresa May will have 3 days to come back with her comment on how she presumably does react to this defeat that she's going to get tonight, and then it will be whether the Labour Party enforces a vote of no confidence, which it's unlikely to win, but it could win, because, it's possible that you could get maybe DUP defections away from the party line, which is to vote with the Conservative Party. But even in that scenario, I do not see that you're going to get sterling back down in the parity area against the dollar, certainly. I think that there is a possibility of a general election, but the more likelihood is, I think, of a second referendum over a general election at the moment being the electing scenario, or the voting scenario in 2019.
And of course, even when this withdrawal agreement is agreed on in whatever form, there then has to be another set of negotiations afterwards. Are we going to be riding a sort of sterling roller coaster for years to come?
Well, exactly. I don't see how this one is ever going to really be resolved in the near term, because obviously we've got to not only get this withdrawal agreement done, and then you've got the trade deal to be negotiated after that. So it's going to be a very long-term scenario that plays out. But obviously this is a first very important stage of getting the UK out of the EU in principle, and then it goes for the practice of actually getting a trade deal sorted out, and then they can move on. But it's going to be a very long-term project that is sort of trying to implement this Brexit vote.
Plenty to keep you busy in the meantime. Richard Perry from Hantec Markets, thank you very much for joining us from London.
Thank you.
Clearly, markets have a lot to look out for in the next couple of hours.
Me too, yeah.
We'll see what happens. Turning next to Germany, Stephen, where new figures have shown a substantial slowdown in its economy.
German economic growth was actually the slowest since 2013 last year. Europe's largest economy expanding by just 1.5%. That's down significantly on the growth rate in 2017. Now, fears that Germany may have technically entered recession seem to have eased. They'd emerged last week after data showed that factory production in Germany had slumped between October and November. Weaker exports also hurting the headline economic picture, but there are some also good signs in the German economy. Unemployment is now at its lowest level since reunification.
You're staying in Germany next, where hundreds of flights have been cancelled over strike action. Airport
security staff walking off the job are staging a one-day walkout at 8 airports across Germany. They're represented by the Verdi Union. It's estimated that more than 200,000 passengers have been affected by the action, including at the hub of Frankfurt. Nicholas Rushworth has the details.
German airport security workers want €20 an hour, not the 14 to 17 euros they get at present. The Employers Association is offering pay increments of up to 6.4%, but that falls well short. Negotiations have stalled since a fourth round of talks earlier this month.
The employers have had 9 days since our last industrial action to make a better offer. They haven't done so, so I hope this is a signal to them. Further strike action cannot be ruled out.
At least 220,000 travellers are being hit by cancellations and delays at 8 German airports. Frankfurt axed around half its flights. Passengers were urged not to come unless they were certain of flying.
I have to take the train for a 5-hour journey now and carry my luggage as well. The interests of a few people are being put above the interests of the many.
I'm used to this kind of disruption. It's not the first time there has been a strike, but I have to go and catch a train now.
The industrial action now follows walkouts at various German airports last week. Worker management pay negotiations resume next week.
Well, let's wrap up this business update with a look at what's happening on the stock markets for you. European markets trading pretty flat this lunchtime. London's FTSE 100 had started the day up 0.75%, those gains being erased as the day has gone on. Similar picture in Paris and in Frankfurt as well. Of course, that Brexit vote will be big news for the markets later. Delano.
Exactly. We'll be keeping an eye out on that. Stephen, thank you very much for that. Stephen Carroll there with a look at the day's business news.